So for me right now, what I'm focusing on is running into this key wall of resistance right here, basically in the options market. And I'd love to talk to you more about how you handle this with stocks. But essentially, what we are looking at in options is when we have a situation where our bullish trend breaks and we switch into, I call it the pinball mode, just basically where you have some wide range expansion days, you're bouncing back and forth between this area of support and resistance, but not really getting anywhere. In the options market, what we do is we shift from a strong bullish directional stance, and then we switch into this mode where we're doing short-term time frame trades. And then also we adjust the option strategies that we're doing. We switch from doing more aggressive strategies like buying long calls, which is something that we do all the time in these areas. But then once we get into our pinball mode, we switch into a variety of other strategies like butterflies or using spreads. And so for me, a key part of my analysis comes in quantifying this area and this area of support and resistance. And so the number one thing that I'm going to talk about today is how to identify the area of resistance that we're stuck under and how to know when we're going to switch back into either a bullish buy mode or a sell mode. So what are y'all doing as far as stocks in this area? I noticed that you were talking about a couple different relative strength names. I mean, that's one of the key strategies that I will use as well.
Yeah, I mean, for me, when the market pulls back, I'm looking for the strength. I mean, my strategy is that when the market does rebound, the money tends to rotate back to those leaders first. So yeah, I mean, I used to find some setups on those relative strength leaders. Is that similar to what you do?
Yes, that's exactly what we do. And so we focus on trading kind of the weaker links within this area in the options market. So for example, trading the Russell, the banks, energy are kind of the weaker links right now. And then as we start getting the breakout, then we start adding into the relative strength names. But first, I always like to quantify, okay, so at what point am I going to start buying, right? And so as we're sitting right in this area of resistance, there's a couple different factors that I look at. Number one, to quantify the resistance, I always start with the moving averages. So this is going to be a combination of moving averages, Fibonacci, and then number three is going to be key psychological values. So the first thing that I always start out with is just the basic daily chart. I always use the NASDAQ because the NASDAQ has been the leading index the majority of the year. And so whether it's leading lower or higher, it's typically what you want to follow. So I start off on a daily chart, and the moving averages that I use are going to be the 8, the 21, and the 34 EMAs. It's going to be your fast moving averages. And then I use the 50, 100, and 200 SMAs. And so as of right now, trying to quantify resistance, I mean, can you see this major area of resistance right here? This, for me right now, the hold below the 50 SMA is absolutely critical. So you can see multiple other times throughout the course of the last, go back over the course of the last 2 years. And the 50 simple has been pretty critical. It's pretty critical institutional level. And so for me, every single time I see this index come up and run into the 50 simple and it's not able to get through it, that's telling me that the path of least resistance is still down until the price can come up, break above it, and close above it. I have to say we're still below resistance in as far as the moving averages are concerned. Now you can see that you have been able to break through some of these others. This is the 8 EMA, the 100, the 21, and the 34. However, the 50 is a pretty key area right there. Is that in line with the types of moving averages that you use at StockCharts?
Well, I can tell you that I was very excited to see you using EMAs for the short-term moving average and SMAs for the longer, because I do the same thing.
Excellent, excellent.
Well, I always get the question, why do you do that? Why would you have EMAs for one and SMAs for the other? But for me, I just never could quite understand the logic of taking a long-term moving average and then applying a weighting toward the most recent data. It's like, why have a long-term moving average?
So now, come on, that's exactly what I do.
What's that?
That's exactly what I do. I have EMAs all the way across, but that's our decision point analysis process is, all of our signals are developed by those moving average crossovers. And for us, we do want to wait on the most recent data just because we're getting our signals off of the crossovers.
Yes. And, I think both methods make complete sense. For me, I have adjusted the moving averages that I've used over the past couple of years. And I just found that I really liked this one just because I feel like it's while I agree with you, Aaron, that the faster data is a little bit more critical, which is why I use them on the 8, 21, and 34. The main reason why I started using this one is because it's so widely used. It almost becomes like a self-fulfilling prophecy, I feel like. So that was just the main reason why I started using this one.
Yep, that's what Mary Ellen tells me.
I've got a question for you, Danielle.
Uh-huh.
Because I agree with you. This consolidation, you want to make sure we get this price break, and I was talking about that at the open, and how maybe the FOMC minutes when they released at 2:00, maybe that's a catalyst. But one thing I'm seeing is software stocks, which have been one of the strongest areas of the market, are breaking out to about a 3-week relative high to the S&P 500 today. And so that has been a pretty good signal in the past when software begins to resume its leadership. That a lot of times will spark a breakout in the major indices. And just wanted to point out, I'm seeing it today. And Aaron and I were talking about a stock we both own, AYX, which has been one of the best relative performers in the software space. And that stock's on fire today. Shopify, another one, breaking out to new highs. So, if we were in a market that looked like it was ready to roll over and go lower, I just don't think there'd be the kind of interest in some of these aggressive names that we're seeing. I don't know if you have any comments on that.
Yes, definitely. I mean, the main ones that I look to kind of watch for the breakouts are, first of all, I like AYX and Shop both. I consider Shopify to be one of the key e-commerce names that is just kind of a result of the online purchasing generation that we have, where people are shifting to buying everything online. And so I think Shopify is a great stock. I like it in the long term. AYX, this one has quite a bit of high short interest, so I think that helps with that as well. But yes, I do consider AYX one of the leaders, and I agree with you when you say that you're looking towards those leaders. Typically, the ones that I will look at as far as leaders are concerned is I pretty much always start off with Microsoft. And so I want to see that Microsoft is breaking above the 50, which it is, but the next piece of the analysis is focusing on Fib as well. And so that was the next part that I was going to get into is, yes, we have these relative strength leaders. Amazon hasn't been as great here. Adobe's another one that I like to look at. And then I also like to look towards McDonald's. So what I do is I basically look at the top weighted stocks, the strongest top weighted stocks in the top sectors. So if you have within that, okay, discretionary, you have McDonald's, which is very strong. You have Starbucks, which is very strong. You were talking about Home Depot earlier as well. I mean, all of these leaders are doing really well. So to answer your question in a long-term way, yes, I agree with you. But the next line in the sand that I'm looking towards in the NASDAQ is, and the next piece of that analysis is going back to Fibonacci analysis. So do you use any type of Fibonacci analysis?
I occasionally will use it. That's not one of my go-tos. I don't know if, Aaron, do you use it at all, Fibonacci?
I do use it on my annotations periodically. I know that every now and then you look at a price chart and you're like, this this is going to look exactly right on a fib tool. So I'll run it, and sure enough, you'll see those lining up as far as support resistance areas. But typically it's not something like a go-to, but I will use it on occasion.
I always find that it's better after the fact. Like with hindsight, I can go back and I can draw that Fibonacci line to be perfect, kind of like Elliott wave. But
right, and then
actually to trade off of it right in the middle of it, I just have never had success. I'll be honest.
All right. I know I've hit some points before, but yeah, I certainly agree with you with Elliott wave, and not to disparage any of our users who do like it, but I don't.
I would just add one more thing, and I'm very interested in hearing what you have to say about this too, Danielle.
Sure.
But a lot of these confirming or corroborating indicators I use in addition to price. So for me, at price support, price and volume to me are the two most critical elements of technical analysis, along with relative strength. But if I can see a major price support level, and then I happen to put the Fibonacci tool up and draw my retracement zones, and it happens to be right at price support and also a key Fibonacci retracement zone, then that to me adds a little bit further confirmation to what I'm already thinking. But I wouldn't look at it first using Fibonacci, if you know what I mean. That wouldn't be the first thing I would go to, but it might be something that would just give me a little bit more confidence with the trade.
And, I think you articulated that perfectly, because that's exactly where I was going with this, that, the first piece of watching for that overhead resistance zone comes with your key technical analysis, which is price above or below the moving averages, and then if it's pausing at the moving averages, right? So here, here, and here, you can already see that. But then when you overlap, when you take a Fibonacci retracement, which the retracement zones are, you can come up with those by using the previous high and the previous low to measure your resistance on the way up for each swing. And when you start to overlap those with the moving averages, so for example, in this last swing that we experienced in the beginning of May, you can see that the market paused directly at the major 618 retracement zone, and then boom, down it went. So that's kind of the second piece for me, is overlapping the area with the moving averages, and then adding that on to the 618 retracement zone, because you can see it again here on this larger swing. You have this, everybody remembers this in May, right? Well, when it starts rallying, it looks good. What should you do? But it usually will pause right around that 618 retracement zone for several days. And in some cases, like right here, it couldn't make it through and it rolled over. But when it starts to break and close above that area, that's when I start getting even more bullish. And so now, if you look at this most recent swing, and you measure the high to the low of this swing, we're basically directly stuck underneath this key area of resistance. So now we have an overlap of the 50 simple with the 618, which is the exact situation we were in right here. And so what I'm looking for confirmation of, yes, we have some of the market leaders that are carrying us higher, but we need the overall index to be strong enough to break out and close above this level for me to get more bullish.
Okay. Completely understand and agree. That would absolutely add some confirmation to what we're seeing. When you look back to what we went through back in May, we went down, we took that initial move to the downside, and then we bounced like you drew. When we went back down and tested that bottom again, we really didn't see much of a bounce. We really just hung there for a day or two, and then we lost that support. This time, and it doesn't really show it as much on the NASDAQ as it does on the S&P 500, but we went back down on the S&P and actually got down to where we were previous and didn't just hesitate. Immediately, we came roaring back to get up close to resistance. And I think the character of this move in August is a little bit different than what we saw back in May, when things rolled over and never really bounced that second time and just immediately broke down. So it's still, I still am looking for that confirmation. It's still that breakout to confirm. But I'm just saying the character of this right now looks to be a little bit different to me.
Yes, I agree with you. I mean, it's definitely more of May was definitely more of kind of just a slow bleed every single day where things just kept getting worse. Whereas this was more one violent shock to the downside that's kind of having trouble recovering.
What are the yellow candles on your chart? I mean, I see back in May after, it stayed red all the way on the bounce and then back to the new lows and then started turning yellow on the way back up. This time you didn't hit new lows, but now today's candle looks like it's turning yellow. Does that have any significance for you?
Yes. So those are, I call them the warning sign that the trend is shifting. So these are called the trend strength candles. And what they do is they populate based on price in relation to the moving averages. And the moving averages are based on the fib number series. So you have 8, 13, it starts with 5 actually, even though I don't use that on my chart. 5, 8, 13, 21, and 34. And so basically a strong trend indicates that price is above the 5 and the 8 EMAs, and the EMAs are stacked. And so that's when you get those green candles. Yep. And when you're in the yellow zone, that's when you're shifting down into this area where you have price breaking above or below the 21 and the 34 EMAs. And you're in kind of this, it's just, I call it the warning zone, because you're not in a bullish trend and you're not in a bearish trend, and you're just kind of breaking through both of those areas. And so it gives you a heads up that things may be changing. So it's quantifying if the moving averages are stacked or twisted up, and then also where price is in relation. And then if the price is underneath the 34, then they're red.
So would you say the yellow is kind of the danger zone? Because if you're wrong, it can go against you really hard in either direction.
Yes, that's exactly right. And so once you start getting those yellow candles, you have to be aware of the fact that the trend may be changing here. And so what you need then for the confirmation of that trend shift is, well, for example, right here, you're in a bullish trend. Hey, warning sign. The red is the confirmation that you have changed. Okay. And then on the way up, you can see how it's red, warning sign, things are changing. The dark green is the confirmation that the trend has regained strength. And you can then focus on the upwards trend. And especially for me as a short-term options trader, I mean, most of my trades are anywhere between a day and really 3 weeks at the most. The short-term trend shifts are very critical for my positions.
Okay. All right. Well, can you do me a favor? Can you email me when you get a green candle?
Right. It's I don't know. I mean, I feel like we're pretty close, and I feel like we're pretty close, but at the same time, most of these rallies that we've seen, particularly on good news, have all been sold right at this key area of resistance. And I mean, the next piece of that analysis is, you start off with the moving averages, then you move on down to Fibonacci retracements, and then I also add symmetry in there as well. So I look at the previous swings and measure those off of this previous low to see if we have anything that's similar that would also give me a zone for resistance. So do y'all use any type of symmetry or measured moves?
For patterns, yes.
Mm-hmm. Same.
Yeah, I mean, if I see a triangle or something like that and we get the breakout, then yes, I'll use measurement, cup and handle, head and shoulder, reverse head and shoulder, those types of things, yes.
Excellent. So, I mean, basically what I do is I just come in here and I measure these previous corrective swings, and then I look and see if we have anything that is similar. And then that gives me just kind of another area to work off of. Is that how you do it, Erin?
Honestly, like he was saying, I generally am looking at the chart patterns themselves. And once I can see a pattern, then I calculate your minimum upside or downside target based on the pattern. And then I go and look at historically and see where all the support and resistance are. As far as price, not just what's going on as far as that measured move.
Excellent, excellent.
Mm-hmm.
So, after I go back and I measure those the previous rallies within because you want to measure the ones that are within a similar kind of personality, because the rips that you have higher aren't the same as the normal trend following environment. So I go and I measure these moves, project it from this low right here. And then the final piece of that is taking that information and just looking for the overlap. So really what I do is I just look for key points of overlap. And then I also like to overlap that with key psychological values. So you can see right here, for example, you have quite a bit of overlap right at 7,900. And right here, you have a bit of overlap right at 77.44. I would call it 77.50 more like. But I mean, 5 points in the NASDAQ is not really that significant. So the two main areas of resistance that are standing out for me are going to be 77.50 and then 7,900. So for me, when I would really start wanting to get more aggressive on the buy side, would be a break and a close above 77.50, and absolutely by this time up here. But this is the main area that I'm looking for right now.
All right, now I want to make sure everybody understands too, this is the NASDAQ 100, not the composite. Correct?
Yeah, that's correct. It's I use the NASDAQ futures just because I like the overnight data, especially in the news-driven environment. It just makes it a little bit easier for me. But I mean, I can do the same on this chart as well. And I mean, if you wanted to use NDX instead, that's just going to translate roughly to 7,800, really. 7770 you could call it, but I like the round number of 7,800. And then the next level would be 7,900, right about there. So I just prefer, we typically use S&P futures, Dow futures, Russell futures, just because of the overnight action. And when you're doing short-term options trade, it just tends to help a little bit. So
is it safe to say while you're in this red zone and you're kind of looking for direction that you don't do a whole lot of trading?
Yes, that is correct. And it will drive our members crazy sometimes because they're wanting trades. And I mean, we have a pretty active trading room where we post quite a bit of trades. And so it will drive them a bit crazy, but it honestly drives you more crazy if you have a fully loaded portfolio and every single tweet is just completely driving the market. And so, today was a good example because it was actual data, I felt like, that was driving the market. With the retail earnings, it was very strong consumer spending evidence right there. And so I feel like the reports this morning were particularly positive. But at the same time, I mean, when we're right on this area where we're straddling a breakout higher or potential next down move, generally I have far less positions on. Each position carries less risk, and they're more kind of neutral options trades against support or resistance.
And as the volatility index drops, and I know it was dropping again today, a lot of those options that you're talking about, when you're trading options, those are starting to get a little cheaper, so a little bit more cost effective.
Yes, that's correct. When the volatility is high, especially when you get these large moves like this, and we have a high volatility environment, it makes it really difficult to come in and do things like just buying puts, because when the VIX is up at these levels above 17, we usually say that's when the options are getting really expensive. So we will shift to additional strategies like selling credit spreads. And so in that method, you're taking advantage of the high vol because you want the credit that you sold to decay as the volatility goes lower. So it's definitely requires a lot more finesse within this area, but there's nothing more that I love than starting to buy the breakout. So, I mean, Costco for me, I don't know if you have been trading Costco, but I view this as definitely one of the strongest relative strength names. As you can see on this chart, it's held up above the 50 despite all of the rhetoric over the course of the last 21 days, really. And it's a very, very strong chart pattern. It's also really strong within the staples sector, which is one of the strongest sectors right now. So for me, I'm eyeing a buy right here in particular.
Mm-hmm. Yeah, that one looks, that chart looks pretty good. Of course, I love Costco. I'm actually going there this afternoon, so that could be the cause of a breakout.
Excellent.
I'll see what I can do to help you out. Couple questions. We've got about 3 more minutes here, and I know someone's asking for your website and levels of service. But before you get to that, I want you to take a look at Apple, because Apple is threatening to make its highest close of 2019 today. And of course, that obviously is one of the leaders. What do you think of Apple?
So Apple and Apple's behavior is absolutely critical to the overall health of the market. I use Microsoft a little bit more as a leader just because Apple has the additional issue that it's impacted a little bit more by China and by tariff news. But I would say that number one, the positive movement on Apple today is a good sign for the bulls. It's a vote for the NASDAQ. It's a vote for the bulls. But at the same time, as it's getting extended off of the 8 EMA, you're probably looking at the potential of a pullback if you look at least on the very short term. But I mean, if you look over at Microsoft and you say, okay, well, what about Microsoft's price action today? Well, Microsoft is running right into resistance as well at the 786, but the fact that it's strong today is another vote for the bulls. So essentially, I mean, it's honestly my least favorite spot in the market when you're running directly into these resistance zones. And so more often than not, what I do is I wait for a trigger like Aaron was talking about with the moving average cross, and I want to see a breakout before I really do too much on an aggressive options basis.
Where would you, all right, let's say you get that breakout. We only have about a minute here, but let's say you get that breakout, then all of a sudden it falls back down below. Is there a place where you can keep a really tight stop in case you get that false move?
So it kind of just depends what you're doing. If you're doing a short-term options trade, for example, a day trade, like for example, if the Fed announcement is amazing and Microsoft just takes off and breaks out above 140 and you day trade it for a break to a brand new high, I can see doing that. But for a swing trade, it's really difficult to buy it up at these levels because your least risky spot to buy it is going to be around this area, because I'd want to have my stop down here for a swing trade. If I was going to buy it for a breakout for a day trade, I'd buy it on the breakout of 140, and then I would target the new high.
Okay. All right. Can you share with everybody your website and give them a chance to go in and check out what you do?
Oh, definitely. So I have a newsletter at 5startrader.com. So it's FIVE, 5-star. Sorry, my handwriting is a little silly with the mouse. 5startrader.com. So this is a free newsletter. I post my free webinars in here, the media events that I'm in. I have a newsletter that I post a couple different times per week. You can see the links to social here. I also have free downloads, and you can go ahead and check that out. And then also you can find me in the Simpler Trading chat room. So you go to simplertrading.com/join. And within this area right here, you can find me in the options room.
Awesome. All right. Well, it is always a pleasure to have you here with us, Danielle, and we look forward to having you back. One final thought. Do you think this is a continuing bull market? Do you think we're going higher?
I do think that we're going higher. I don't know that it's going to be today, but I think that going into the 2020 election, that we have a pro stock market president who's going to, ensure what he can so that the stock market and the economy remains strong into the election cycle. And for that reason, I am sticking to the long side in the long term.
Sounds good. All right. Always a pleasure, Danielle. Have a great day. And thanks so much for sharing today.
Thank you.